Keith, good morning. It's great to have you with us again. It's interesting. While traditional fintech funding has cooled, crypto funds have absolutely exploded. You have Sequoia as well as Bain Capital announcing funds worth $500 million just over the last few months. Do you think fintech dollars are moving into crypto and Web3?
Well, definitely crypto is one of the few hot areas left in private investing. Eventually, though, people are going to have to reconcile the private market valuations of crypto companies with Coinbase's multiples. Like, you can't defy reality forever. But right now, because of dedicated crypto funds, these people have nothing to do except spend the money on a certain subset of investments. And that's leading to artificial price distortion.
You said that, Keith, with some, I don't know, is it disdain in your voice? You said they've nothing left to do but sort of increase the valuations of these companies. What is Founders Fund's position? Notably, you guys don't have a dedicated crypto fund.
Yeah, we're generalist investors. We like to find the best founders on the planet with the most ambitious plans, and we'll fund them regardless of what they're aiming for. And so we funded crypto companies successfully. We bought Bitcoin directly over the last 8 years very successfully, and we're looking for new innovative opportunities that leverage crypto, like Royal reinventing music, but we're not looking for crypto quant crypto. We're looking for world-class founders, what we call N-of-1 founders, the one person on the planet who can pull off a rearrangement of an industry.
So is the sector overhyped then, Keith? What do you think happens to all of these investments that are being made and these funds, especially from Bain Capital, private equity firm, getting into this?
Well, it's not overfunded per se. It's just that there's going to be one or two or three companies that are iconic and important. And the key is for an investor is, are you on the cap table? Are you a material investor in those companies? Having an index doesn't really help you.
Keith, we were just talking about the D2C landscape and how a lot of the companies that have gone public in that space, investors are reconsidering what they're really worth. And I'm reconsidering what their strategic advantage is. You've been doing a lot of thinking about this space and sort of how to aggregate power and platform benefit among these brands. What's your thought now on what's important for them to do as the digital marketing landscape shifts under their feet a bit?
Well, obviously, targeted advertising is more difficult, and that means the customer acquisition costs for people who are targeting a subset of Americans is going to be more expensive, and perhaps prohibitively more expensive, especially as the cost of capital increases because of inflation and implied interest rate changes. So fundamentally, people who want to build a new direct-to-consumer business need to find a low-cost way of acquiring customers, which, if you're not a horizontal platform, is extremely difficult and challenging and maybe impossible in the West in the short term.
But you have some ideas on how they can do that, right? So talk about the strategic levers that are important for them right now. I mean, you see, tools the like of Stripe, et cetera, trying to aid the sorts of companies that are doing this, but differentiation seems harder than it was in the past.
Well, Stripe and Shopify create tools that empower entrepreneurs to start a business, scale a business very naturally, very easily. But can you reach venture scale or public company scale is a very different question. And only a small fraction of companies that use these platforms, whether Shopify, whether Stripe or equivalents, are not going to be successful independent public companies. That hasn't changed over the last 40 or 50 years. So they do empower people to create cash flow businesses, which can be very successful. It depends on the goals and aims of the company, its founders, and its investors. But for venture capitalists, we need breakthrough hits that are worth $10 billion or more. And that's going to be very rare, regardless of what platform choices you choose.